Good evening, VV Nation. My name is Ryan and welcome to the channel. Now, every now and then, it's always a good idea to just bring it back to the basics. And that's going to be the point and objective in tonight's video. So we are going to discuss moving averages. So that's right. In tonight's presentation, I'm going to give you 3 basic concepts when to utilize moving averages, as most investors see them as entry points and exit points when it comes to their positions. In addition to that, we're going to utilize the VectorVest 7 software. I'm going to show you the power of the software and the power of moving averages when it comes to market timing. And to top it off, the last thing I'm going to show you is our stop price. That's right. That's our signal to actually sell a position or consider selling a position based on price action performance. And our stop price does utilize a moving average. Now, whether you're new to investing or a seasoned VectorVest user, I do believe the information that I present to you in tonight's presentation will be very valuable when making money in the stock market. So let's get started. All right, right behind me, I do have a graph up of the SPX over the last 12 months. Now, there's 3 types of moving averages that are most commonly used. And that's going to be weighted, simple, and exponential. I'm not going to go into those definitions, as you can just simply Google them. However, I will say that exponential moving averages typically are used by more active traders as they focus on more current data. Now, the first technique I am going to show you when it comes to moving averages is comparing price action to a moving average itself. So on the right here, I do have 3 moving averages being very popular ones for this type of strategy. The first is going to be a simple moving average of price action here, just a 40-day moving average of price action. So you can see here, if I use my date line, we got a nice crossover on March 29th, showing us that upside momentum is now actually gaining some steam. You can see price action here utilizing that 40-day moving average as a level of support there several times with 2 touches. But you can see price action staying above that 40-day moving average here, crossing below it around mid-August here. You see some consolidation here, even several retests of that moving average, almost like a level of resistance at that point. And once again here in October, we finally got a good crossover, actually a gap up here. So seeing a lot of conviction and that momentum above that 40-day weighted moving average, and price action staying above it even to today. Now, the next one is going to be a 20-day EMA or exponential moving average. Now, just to note, the shorter the time frame of the moving average typically is going to be utilized by a more active style of trader. So if you're a buy and hold investor, the 40 or 200-day moving average is very commonly used, especially looking at buy and sell points or even levels of support and resistance. Now we can see here the most recent example here, price action going above that 20-day exponential moving average back on the 3rd of November, with the SPX showing a lot of momentum to the upside here. We did get several touches here showing some support at that 20-day exponential moving average, and yet price action has yet to falter below it. Now, if we take a look at the last one I have for you, which is a 200-day moving average. However, you see price action going below that 200-day moving average in both instances over the last 12 months, being in March of last year and once again in November of this year, were short-lived, as the 200-day moving average is widely used across the board here. So anytime that price action of an index especially drops below the 200-day moving average, that is a big concern for the bulls. Now, the second strategy I'm going to show you is actually utilizing 2 moving averages and compare them to each other. Now, the strategy most commonly used on the VectorVest channel here is going to be a 3 and 8-day exponential moving average. So this is typically utilized for swing trades or very quick trades in general, and not necessarily for long-term strategies. Now, that being said, you can see the SPX over here over the last 3 months in very bullish manner here. So let's take a look at these 2 moving averages and get rid of price. You see, over the last 3 months, there's actually only been one concern here where the 3 crossed below the 8-day exponential moving average. So you probably wanted to hedge your positions or started, protecting profits at that point. However, shortly after, the 3 did cross back above the 8-day moving average. And that's what I like about investing. You can always buy back into the market. Just because you sold something doesn't mean you can't buy it back down the road. You just want to protect yourself against downturns in the market if you're not hedging your portfolio through some kind of contras or option strategy in general. Now, as we close in the present day here, we can see that the 3 remains above the 8-day exponential moving average, confirming this bullish momentum to the upside. All right, here's my third technique when it comes to moving averages. Now, you don't have to use moving averages when it comes to just price action. In this technique, we're actually going to utilize moving averages of indicators. That's right. So on here, you might be familiar with this layout. This is actually our NPI, or near perfect indicator layout. You can see the blue and red shaded line here. This is actually a moving average of our stop price. We have a 5-day moving average of our stop price and a 40-day moving average of our stop price. And down below, we have a 5-day moving average of our RT, or relative timing, and a 40-day moving average of RT, or relative timing. Now our stop price is less subject to change as the RT itself. So the stop price does a great job of actually giving us a sense of trend. If we take a look here, we can see that NVIDIA, and I utilize NVIDIA just because it's a very popular stock, and I thought most of you watching this could relate to this position in general. Now that being said, you can see that the blue line did go above that red line here, showing us that trend is finally in our favor back on the 8th of November, 2023. So while the stop price looks at the trend of the position, the RT is actually going to be like our trigger to actually execute based off the trend. Now you can see the 5-day above the 40-day moving average of RT. So the trigger was already given actually a couple days prior here. However, we were just waiting on the trend for confirmation. So by the 8th of November here, we did have both signs to execute this trade here. And ever since then, you can see the 5-day moving average remain above that 40-day moving average, showing us to stay in the position. Now in this strategy, once the green line crosses below the red line here, that's showing that that upside momentum is now losing steam, and you should consider getting out of this position. Now I will say this, before you just let that happen, always ask yourself what your objectives were when you first get into this position. Because you can see here, NVIDIA back on November 8th was trading around $460, however, hit its high at $697. Thus, you got to ask yourself, at what point is enough profit good enough for you? Now, you don't have to exit a position all at once. You can at least take some profits off the table, because that is the #1 objective. Always, always, always protect profits. All right, now I did want to tell you about our stop price. That is our line in the sand and when the sell signal is triggered. Now to explain our stop price, it is a simple 13-week moving average, and we adjust it for the company's fundamentals. That being said, if the company has poor fundamentals, we'll actually tighten that up a little bit to get you out of the position a little bit quicker. Now, if the company has very solid fundamentals, we'll actually loosen that a little bit. If it's a great company and great fundamentals, we'll give it a little bit more wiggle room to grow. So you can see here, I got Tesla right behind me. The sell signal was actually given here back on the 25th of January due to price action crossing below our stop price, which is represented by this teal line. You can see the sell recommendation is still given here. As long as price action stays below that 13-week moving average or our stop price, the sell will remain in place. All right, now the last thing I want to show you when it comes to moving averages is how you can actually properly time the market utilizing some of our market timing systems that are based on moving averages themselves. Now that being said, the first one I have up for you is our DEW signal. This is a very popular signal when it comes to swing trading. Now that being said, here I am on the enhanced pro trader timing layout, and down below I did switch this to our DEW timing signal here. Now DEW is an acronym, D for DPO or detrended price oscillator, E for the upper and lower envelopes that we utilize here. However, this white line, that is a 30-day weighted moving average. Now that being said, you can see it does a great job keeping you on the right side of the market. I have it on the last 6 months here. Now there was a down signal back on the 11th of August here. You can see price action crossing below that 30-day weighted moving average. And in addition, DPO went into negative territory. Thus, the down signal was given. Now, as far as playing to the upside of the market here, you can see it did a great job. It got investors into the market that utilized the VectorVest 7 system as early as the 3rd of November. This was caused when price action went back above that 30-day weighted moving average, and DPO slipped back into positive territory. Now, recently, we did get a little chop here, a down signal, followed by an up signal just 2 days later. And that's why I say you can always re-enter the market, but it's better to be safe than sorry. You can see currently we are in a DEW up signal right now. However, price action is looking at that 30-day weighted moving average here, almost like a level support. So I am concerned about that. In addition, the DPO or detrended price oscillator here is on the decline right now. So if you are a member of VectorVest, definitely keep an eye on this, as the DEW is on the verge of a possible down signal. However, I don't predict the market, I only follow the market. So right now we are playing to the upside because of this DEW up signal. Now the next signal is actually going to be a GLB RT kicker here. And if I change this to our RT kicker combo layout. Now this utilizes green lights in the color guard, which simply just looks at price action of the VectorVest composite. If you're not a VectorVest subscriber, this is actually how we track and follow the market. It's over 9,000 stocks that we're currently tracking in our database, and we just feel it's a better representation of the broad market. Now that being said, this is more momentum market timing signal. You can see up signals here given with green lights and the price action of the color guard. However, what really generates these signals is that we utilize a 10-day moving average of RT along with the 15-day moving average of RT. So as long as the 10 is above that 15-day moving average, that's giving us a sense of more momentum to the upside. Now you can see the down signal was given back on the 16th of January, and the price action of the VectorVest composite has been losing momentum here. It did get a new high back on the 29th of January. However, the last few trading days, we are seeing a slight retracement to the downside right now. In addition to that, if we look at the moving averages of RT, you can see they are on the decline right now, showing that this upside momentum that we've seen in the market since November has been waning. All right, VV Nation. Now, if you're new to the channel, this is your first time watching that video and you found the video informative and you learned something today, make sure you hit that subscribe button, as I have a feeling I am going to do more videos when it comes to taking it back to the basics. These are great presentations for new traders. And in addition, even if you're a veteran, sometimes you really just have to get back to the basics to get back on track, to get your portfolio where you want it to be. So please let me know what you thought of this video in the comments below, as I do a lot of my presentations based on the feedback that I get from VV Nation. Now, as always, if you found this video informative and you see the potential to make money with what I showed you this evening, make sure you hit that like button and subscribe to the channel. Good night.
Hey VV Nation, Glenn Tompkins here. Did you miss out on the Tampa 2-day investment seminar? Well, right now you can get access to the live recording from this event for only $195. That's right, folks, $195. You can get access to all the great presentations from instructors like Steve Chapp, Jerry D'Ambrosio, Jim Penner, Ron Wheeler, and yours truly. Folks, you just need to go to www.vectorvest.com/replay24. You need to do that right now.